This is Morris from San Jose Options. I'm working in the Option Colors volatility trading options platform. That's what you see on the screen. This little lesson is dedicated to a friend of mine, Sudhakar. And just a couple weeks ago, we were discussing earnings on Facebook, and he's just learning to trade options. And he mentioned, that Facebook could be a good earnings play because it's a very successful company, and he was thinking that it would go up over earnings. But what we learned today is Facebook had dropped about 20% overnight. And in case you haven't heard the news, there's all kinds of headlines like Facebook plunges and Zuckerberg's billionaire ranking drops tremendously. One millennial options trader was killing it, and then Facebook cost him like $150,000 in seconds. Facebook stock roughly 20% losses. It cost the company $120 billion. It's one of the biggest losses ever to a company just overnight. Facebook suffers worst ever drop in market value. So those are the headlines. Just a big lesson to learn. If you're new to options, just be careful, especially with these earnings plays. If you ever do them, you really have to trade really small on these strategies. So first we're going to look at this vertical, a put vertical bull put spread. So again, this is a trade that comprises negative vega. So you would think that with a potential volatility crush overnight in Facebook, you would think if you're somewhere within here, or all the way over here, you'll make almost everything on the trade. So it's a short-term 23-day trade, and then you would hope not to go too far this way. But even if you do move this way, since you have the negative vega, hopefully you'll get somewhat of a cushion. Okay, and then as you model this, for example, if we just model it a week using the traditional probability of profit method, POP people call it, it looks like you have a good strong chance to make 3% in just a week. Okay, so next we're going to look at a different structure. So this one is a strangle, again, made very popular by the Tasty Trade Network. And there's a lot of traders that I would guess put this on for that trade. You get the volatility drop. Again, you have a really strong negative vega position. With this, we have a short put over here and a short call. And both of these are out of the money. I think I did about the 15 delta. And again, the profit potential looks great for a week's range. So we'll see what happens to this trade. So the next trade we're going to look at is a calendar spread. This one, again, is short term. You can see over here, it's the front month we sold is 23 days out. And the second month, there's 58 days out. This is another popular spread, mostly made popular by Dan Sheridan. He's always touting this type of strategy. And so anyway, this one has a potential to make 25% in a week based on the POP method of calculating your probabilities. Let's look at another trade. So the next one here is simply purchasing what people call a teeny. It's just an out of the money put, very cheap. In this example, I believe I bought one down by the 10 delta. But again, if you model this with your POP method, you'll see that one standard deviation move predicts a loss of 56% on that put. I can quickly see the other 2 and 3 standard deviation calculations. So again, the probability of profit would really steer you away from this type of strategy because it looks like it just has no chance whatsoever. Then the last trade we're going to look at is really an at-the-money butterfly spread, another really popular trade. So again, this trade is short-term, about 23 days out, but the concept is that you'll get just a really fast drop in volatility at Facebook overnight. And again, the idea is you don't want to move too far, but even if you stay within one standard deviation for a period of a week, you're making about 10% on this trade. So next we're going to go back through all the trades, look at today, and see actually what happened and how much they made and lost. So here we are at the first trade, which was a bull put vertical spread. And we can see that, with that 20% drop overnight in Facebook, it went way past the short and the long, and you're way over here. So this one overnight lost 86%. Here's the second trade idea. This was a short strangle. And again, your margins are going to vary on these depending on the broker. So the way that we calculate the margin, it lost about 279%. But again, you can see we had a strong drop. Actually, I didn't even look at the volatility chart. But that was the expected behavior. And we see, we move way over here, and the trade idea did not work. Okay, so I should have looked at that before, but anyway, I went over to the volatility chart, and very interesting because the volatility typically drops overnight when you have earnings come out, but this time it actually increased. So we had a drop in volatility yesterday, and then the vols today actually went way up. So I went up from like 29 something to 33 something. So, the trading ideas for this, if you played this like a typical earnings play, the price moved a lot and the vols didn't even drop, they went up. Okay, so back to the trade idea. So the next one, here's the calendar spread. Now, we just saw that the volatility actually increased, but even though the calendar is positive vega, you can see that the vega structure of the spread did not help the trade at all. So again, you're down about, 80%? 80% overnight. So again, it's why if you're going to trade these, make sure you trade really, really tiny trades, because when you're wrong, you're wrong. Okay, so next we're looking at one of the winners, which is really cool. Again, the POP method yesterday when we looked at this showed this trade really had no chance whatsoever to make anything, but it actually produced a return of 1907% overnight. So again, we got an increase in volatility, which was very abnormal, and we got just a huge move, 20%. And this one actually was, hit the jackpot. So if anyone did this, congratulations, you made the right choice. So here we are looking at the last trade idea, which was an at-the-money butterfly. And you can see, we started over here and boom, overnight went over here. And the trade just realizes pretty much the entire loss that it could have, 95% overnight. So not much different than the calendar, the put spread, the strangle. Pretty much all of the negative vega type of trades got hammered. The calendar positive vega trade got hammered. Anyone that traded a method that required Facebook to stay within a tight range, like 5% or so, unfortunately just lost an awful lot today. And that long put, amazing. Let's just look at that one more time. Okay, so here we are one more time to look at that long put. I was just looking at it. The put was 75 cents and went up to $15. So phenomenal trade. Is this the way to go? I don't know. But for today on Facebook, all those traders buying the teenies really did awesome. So that's about all I wanted to say. Sudhakar to you. I'm glad you didn't do any trading on this. Maybe I saved you a 90% loss. So anyway, you guys take care, and good luck with your trading. And if you're doing earnings, make sure you trade small. Thanks.